Welcome to Yellow Tunnel. My name is Lakshmi Rappel. I'm CEO and founder of Yellow Tunnel, and today we're going to have our strategy roundtable discussion where we talk about current market condition, look at the current pullback, technology selling off, value stocks are making new highs with the small caps. So let's try to make sense of it as we approach what are we approaching? Unemployment data and FOMC meeting, right, next week. And also earnings. So there are a lot of news that can move the market one way or the other. So let's look at the right strategies, right, for the second half, right, for the second half of the year. We still have Q3 and Q4 to go through. So it makes sense to kind of zoom out and just kind of look at the short term, but also long-term view. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. I see a lot of familiar names. Thank you very much for participating. That means a lot to me. That means you see value in these webinars. So I'm happy that you guys were able to join me on Sunday morning. Looks like Sunday is the best day in terms of participation. But this is my brief bio for those of you who are new. I think the main difference between Yellow Tunnel and maybe some of the other subscriptions out there or services out there is that we have a team of engineers, right? Programmers, financial engineers, economists that have degree in mathematics, physics, PhDs, and always working on building, this team always working on building new models and enhancing the existing models to find opportunities in the market. But and you have teams like this in a lot of hedge funds. But also in addition to that, I'm trading these live signals in the live trading room every day, and you can see the recordings and you can see participate live, right? And you can see the performance of all those trades on the website. So I think that's the unique proposition of Yellow Tunnel. That's we do, and we also have now Keith and Scott that have over 20 years of experience trading. So I'm really excited about our team. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. If you're new to trading options, I encourage you to visit the link on your screen so you can understand the risk associated with trading stock or options. Very important. And also that I'm not a financial advisor, not registered with FINRA or SEC. I'm doing this for educational purposes only to help you manage your money, right? And look for opportunities in the market by sharing my own experience and my own portfolio, right? So let's take a look before we jump into the trading psychology. Let's jump into the market and see if we can make sense out of it. So one thing that jumps into mind is this precipitous drop in two-year yield. We talked about lowering interest rates for the past 2 years. They were very high, 5%, even as early as May. And now we're down to 4.40, which is close to February, January, year-to-date low, right? A 2-year low in terms of 2-year yield. Also, for the first time in the past couple of years, the 2-year yield is trading decisively lower than the 30-year yield, right? So you have this normalization of yield curve. And as a result of that, stocks like Goldman Sachs, right, or Bank of America are making new highs. So banks are leading the market. You have Goldman Sachs leading the market, normalization of the yield curve. Dollar is also relatively weak. It's staying right at the 200-day moving average, which is bullish for the market. Last week, we did have a pretty sharp move in volatility, especially in the momentum stocks, mega cap technology stocks that were leading the market in the past couple of years. Sharp pullback. Stocks like Nvidia, Google, Microsoft got beat up. VIX jumped to 20, right? Pulled back to 16 on Friday. So that's volatility. Value stocks are at all-time highs. They broke out, right? Everything but the momentum stock, but the Magnificent Seven momentum stocks. broke decisively through this ascending triangle and confirmed, staying at the all-time high. Small caps finally participating, making 2-year highs, on its way to retrace to all-time highs, doing a catch-up trade. And in terms of participation, the stocks above 20-day moving average, stocks above 50-day moving average, you see a sudden, very sharp move to the upside. So broadening of participation. In regional, whether it's regional banks or small caps or mid caps, you see this familiar picture. What else is interesting? China kind of been not going anywhere, still sitting at the 25, 26 level, close to 200-day moving average, pretty bearish price pattern. Bitcoin rate rallied decisively from the 200-day moving average, above 50-day moving average, on the, some people attribute to possible red wave. Right now we have a new vice president that's running for the Kamala Harris, that's potentially running for president. So, but the original red wave is attributed to Bitcoin, that J.D. Vance, the vice president nominee from the Republican Party, he is pro Bitcoin, deregulation of Bitcoin. So Bitcoin made a strong rally to the upside. You see Nvidia breaking through the snack line, important two necklines, right below 50-day moving average. Pretty sharp pullback in Nvidia. 23% drop down, right? 23% drop, very similar to drop back in March. And crude oil precipitously pulled back below 250-day moving average. So you have stocks that are leading the market, there are stocks that are lagging the market. So the question, what to expect next, right? And how far is the sell-off going to continue? And you see stocks like Triple M, which is boring blue chip stocks that nobody likes, making all-time moves, right? 22% move to the upside on Friday, right? You have railroads that nobody likes, right? North Fork South moving 10%, right? These 2, 3, 4 standard deviation move to the upside because everybody's excited about lower interest rate and potentially doing this catch-up trade of the value stocks. While stocks like Google, right, or Nvidia, moving completely the opposite direction. So how long will this rotation trade last? What do you put your money, right? And where is this all gonna, where's the market gonna go into the, well, short term into Wednesday, and then maybe longer term into end of Q3, end of Q4. All right. So Spiders is sitting at the 50-day moving average, right? It pierced through 50-day moving average briefly, rebounded back, so it's staying above 540. If you look at the positioning, let's look at the positioning, dealer positioning as well. So now I'm looking at the gamma exposure, right? I'm looking at the gamma exposure and see if the dealers, right, are they long or are they short gamma, and where's the high open interest in terms of options? Because the high open interest usually indicates the support and resistance, main support and resistance levels, right? You can see them in traditional technical indicators. You can see them in the some of the support and resistance that we looked by our models, but let's look, August 16, 920. So you can see in terms of support, the next level, looking at the dealer exposure, is at 530. There is really very little support at 540 right now. We're very small Vanna. Next level is 530. relatively large, right? 30, 25,000. But the biggest positioning is at 520. So the biggest positioning right now is at 520. On the upside, 570, right? 570. So it's reasonable to assume that the market is going to trade somewhere between all-time high, which 560, 570, right, in terms of positioning. And on the downside, you do have pretty strong support at 520. So 520 is pretty well positioned. You also have positioning at 530 level, right? So those are your key support levels, right? This is, well, last week low would be support, first level of support, right? 538, 540. If that doesn't hold on you have positioning at 530, and then you have positioning at 520. Overhead resistance is resistance 1, right? Resistance 2. I mean, this is probably resistance 0, is this line. So that's probably going into the next week after we have basically over 60% of S&P 500 stocks announcing earnings. On the positive surprise, you could have a rally, right, to the breakout to the upside, and on the downside, you can have a move to the downside. So we need to decide, you know, on one hand, you have broadening of the rally. That's probably the main point. But on the other hand, right, that could push the market to the upside. But on the other hand, you have momentum stocks kind of deteriorating. And if Powell doesn't deliver on the interest rates, or let's say Apple and Microsoft will have earnings similar to Google, right, basically indicating that they're spending a lot of money on AI infrastructure, but they're not sure, you know, how much revenue they're going to realize that short term, then you can have moved, you know, to 530, 520. So there's, I think, 3 scenarios. What the model basically says: one scenario, we're trading in this range, maybe 570, all the way as low as 520, 530, right? One, you have a decisive breakout to the upside, right? Maybe the opposite. Microsoft will confirm that the AI momentum is still strong. They're printing a lot of money. End of August, you have NVIDIA delivering earnings, right? And then the market breaks out, going into you know, September, October. Or we're staying in the range, right? Scenario number 2. Usually August, September, especially during elections here, is bearish time of the year consolidation, and market could pull back. I mean, it already started pull back. QQQ is down 10%. And value stocks are overbought, right? The Triple M, NSC, Goldman Sachs, they are overbought. They're staying at all-time highs. So at some point they need to pull back, and you have scenario number 2. We're trading somewhere between 560, 570 to 520 to 530, scenario number 3. And scenario number 2. And scenario number 3 is that we are, right now the predominant narrative is soft landing, right? But that could switch very quickly to recession, right? If Powell doesn't deliver on the interest rates, maybe some regional banks will fail, maybe there's a huge uptick in credit card defaults and evictions, right? Uptick in evictions, credit card defaults. And if that bubbles up or reaches critical mass or tipping point, then people could get bearish very quickly, right? And then you have scenario number 3. So that's important to kind of end of Q3, right? We're in Q3, July is behind us, we have August, we have September. Usually Q3 is volatile, right? Has a bearish bias, so 2 or 3. So how many of you think, you know, by end of Q3, right, somewhere August, September, end of August, end of September, we are gonna be at 1, right? We're gonna break out through 560, 570 overhead resistance that you see positioning, dealer positioning. How many of you think, no, we're going to stay in 2? And how many of you think we're going to drop to 3, right? Maybe signs of recession, 1, 2, or 3. And in terms of our model, right, you can also see this in aggressive power trader when you look at the spiders. Model still shows bullish bias, right? We could reach, 530 in the next 10 days. That's what the model sees. But in 3 months, we should still continue to make new highs. 570, that's what the model see. And you can always type in, go to AA analysis, type in, spiders or QQQ, right? And kind of look at the predictions, right, for the stocks. Keep in mind that the long-term predictions being updated first of each month. So in 3 days, next week, model will update the long-term predictions because they're based on 1 month's data points. All right, so how many of you say one? One, we're breaking through this position, right? Just because dealers along the gamma, right, at 570, but there is already in September large position in 600, right? So we could reach 600 basically, because dealers along the gamma, and they might be forced to buy stock if there is a positive news in the market, right? So 600 is not off the table by September. So how many of you, how many of you say one? Vlad, no, we're going to break out 600. How many of you say, there's really not a lot of position up until 520, so we're going to trade somewhere between 5.6 and 520? And how many of you say, well, just because you have a lot of put buying at 520, that doesn't mean it's going to hold, and we might revisit the lows, right? Year-to-date lows around 485, 480. All right, so scenario one. Chuck, if recorded, please send. Yes, we will get, yes, Chuck will send the recording. Lalit, 3. Okay, so you have 3, 520 does not hold. Thank you, Lalit. What about Archana? Chuck, what do you think? Dan, George, Lalit, Luis, Manfred, NC, Peter, Ricky, Vito, sorry, or Vito. Anyone else? Where are we heading? Okay, I'm gonna go with 2, right? I think market is gonna be volatile. I'm not giving up on technology, right? I think it's a healthy pullback, but technology is oversold. I think, this is maybe not short term, but at some point this sell-off is going to be overdone, and potentially 450 or maybe 200-day moving average should hold. I mean, it will depend on what Powell will say, right? One risk I do see in the market is that Powell doesn't deliver what market participants want, and he has done that before, right? I always go back to 2018, right? 2018 here, where we did have basically 20% pullback, 10% pullback original, end of 2018, right? So we had 10% pullback, very similar situation. QQQ is 10% pullback, and then in December, Powell everybody expect Powell to say, we're not gonna raise rates, and he basically said no, right? We're gonna be data dependent, and he said that he potentially can start raising rates. Market didn't like that and dropped 10% in 2 weeks. I mean, it did bounce back, but you had a sharp pullback because what Powell said. That was 2018. That was 6 years ago. I think he's been on the job a lot longer, so he's a lot more knowledgeable, right? Almost 8 years. So this time, I mean, that's the risk, but I think it's an outlier, right? Because the bond market usually has been pretty accurate in determining what the next move in the market is. But that is the risk. And if you said 3, you're probably thinking that Powell is not going to deliver, and there will be signs of recession. But I think we are range bound, right? We are range bound, especially when the stocks like Triple M are making 25% move, right? Or railroads, you have to respect these moves, and they do support, right? The transportation, the healthcare, energy, industrials, banks, they're major components of S&P, right? So I think S&P will hold, right? It will hold 530 or 520 level, and QQQ is overdone. So I think at least in Q3, we're trading in the range, going into elections. I think usually after elections could be volatile, but then November, December, I still think strong months where we're making new highs. So I would not give up on technology, at least not yet. So scenario number 2, I think short term, it makes sense to hedge. So I just actually ran the model, so I was preparing for tomorrow. Again, you have health insurance, right? Insurance companies like Aflac going into the earnings, right? Very strong price action, all-time high. So they continue to lead the market. Some of the credit cards, maybe not Visa and MasterCard, but it's at least Discover Financial, right? Continues to move higher. I think Visa was a disappointment, right? Visa, MasterCard is struggling, but Discover, maybe smaller companies like Discover Financial is still doing relatively well. How's my favorite Synchrony Financial? Forgot about Synchrony Financial. Also doing pretty well at close to all-time high. What else? We have Goldman Sachs, right? So your banks, Goldman Sachs leading the market. Bank of America in strong uptrend. Let's see, JP Morgan, I think looks better. Similar, I mean, they did pull back, but looks like at least JP Morgan has started to bounce back. Regional banks, right? Regional banks, whether it's STT, investment banks, or regional banks like KeyCorp or PNC are in vertical moves to the upside. So that's the short-term model. It detects these moves, right, and makes prediction. In terms of support and resistance, we give you buy and sell signal. You can see support, you can see resistance. You can watch the model, right, daily signals, and you can watch the recordings. Some of these signals I actually trade in the live trading room, right? So you can always click on the live trading room and watch the recordings. You have AI analysis where you can type in any symbol, right? Let's say you see how's Microsoft looking. Losing momentum, right? Short term could be more pressure to the downside, but long-term trend probably flat. You can see orders. If I do trade any of these signals, you will see orders in positions. Right, I'm actually hedging my portfolio using Spider's put spread because I think the sell-off may be overdone, but probably not over. And maybe it makes sense to at least have one of your positions to be bearish. You can look at the weekly power trader, just got updated. Also, some of the signals that lead in the market, Bank of America, BSX, Goldman Sachs, similar short-term, medium-term, similar signals. Dynamic power trader is actually my portfolio that you can consistent both of stock and options, right? So you can see all of my orders, right? You can see all of my positions, right? I'm adding to QQQ put spread. I just closed the one from last week. So dynamic power trade is a combination of both stock and option trades. And you can see all of my orders, all of my positions. Earnings power trade is where I trade earnings, right? We did General Electric last week. So that was a good trade, right? So looking for asymmetrical return, right? I put on a trade for, I've been trading General Electric. Here it is, right? Sorry. General Electric. Forgot to type in. Yeah, so I did butterfly, right? I looked at the butterfly, put on the trade for $1 and closed it for $1.40, $1.50, $1.40, right? So 50% return using these asymmetrical moves. And we've seen, you know, Triple M, NSC, General Electric, all making 2 to 3 to, you know, or, you know, historical moves, right? Triple M doesn't move 20%. This is the largest move in the history of Triple M. So obviously that trade still on in terms of do you want to be long or short the volatility, right? Because stocks like General Electric do move. I think it got close to 10% at some point. Yeah, 10% move. So sometimes you want to be long volatility, sometimes you want to be short volatility. So this is an example of these asymmetrical returns where you could get 50% return, 100, 200, 300%, just depends how you structure in the trade by buying out of the money call spreads or butterflies or condors or puts and calls, right? But you're taking advantages of the market volatility. So that's, you can see it in the earnings power trader. And then profit accelerator, some people say, well, the options, it's not for me. This is, you have to be right on the magnitude of the move, you have to be correct on the timing of the move, you have to be correct on direction of the move, you just have to be correct in a lot of different, it's just hard to trade. So then profit accelerator, right? Profit accelerator is where I trade predominantly stocks. You can see I'm long China, small caps, JP Morgan, I'm hedging using spiders. So you can see different types of trades using stock. All right, any other questions? You can always, I encourage you to log in, right? Create an account, add info@yellowtunnel.com so you can get it in your inbox instead of spam or promotional. And then every Wednesday, I create a short video, 5-minute video, where you can actually see my views on the market middle of the week. We do have a blog where you can actually see the blog. Every Sunday, there's a new blog that I deliver that you can get in your inbox. And then there is a lot of educational content on trading psychology, some of the important concepts like 3 key metrics, right? How do you calculate return on capital, probability of success, estimated move. So I encourage you to also view these topics. They're very important. Any questions? Luis, would I ever buy earnings butterfly spreads out further? Usually, I assume most of the time, I mean, obviously 70% of the time it's one standard deviation, right? Like you can see our friends at bar chart, right? We talked about UNH. Let's look at Microsoft, right? Or Apple. Microsoft is announcing earnings this coming week. And the estimated move is 7%, 6 to 7%. Right, and you have a spike in implied volatility. So do I go further? Right, this is expected move. I usually do the my own calculation. This is a little bit different calculation. So let's say I think it's closer to 10%. So I use 2 standard deviation. I buy at the money straddle, right? Do straddle and strangles, right? I take at the money put and call, the ask, and then the next level puts up and call down. And you can see it in my video, right? If you look at the video where I do the calculations. So I usually do the short strike at these levels, right? So 7% out of the money puts and calls, I would pick the strike price. I also would look at the positioning, right? So the only way I would consider maybe going further to the right, if I see that there's a lot of demand, right? A lot of demand going into August, September expiration, right? Let's say Microsoft. So right now, Microsoft largest positioning is 440. 440 implying 15%, 4% move, right? Very large position. But then you have this, a lot of position 465, 480. So in the next 2 weeks, you still have all the way to 475, which is implying 10% move, right? $50 is actually more than 10, 12% move. That's 2 standard deviation. So there are still people have not huge strike. I mean, it's not a significant positioning, but I would not dismiss it, right? A lot of people think the highest level is here, 450. 450 implying $25. That's what, 6%. Yeah, that's the 6.5, 7% move. So that's 70% of the time it's not going to go outside of 450, but if there is a positive or negative surprise, it could get to 470, right? That will be the 2 standard deviation. So the short strike of that butterfly, I would probably select somewhere to 470 level. And then you have long strikes to the left and to the right. And same thing with negative, surprise, right? The core scenario is 410 that we're going to drop 3 to 4%, but there's still a relatively large positioning outside of these levels, and then people are selling short, people are selling 375 put, right? 10% out of the money puts, relatively large position. So if Microsoft says something negative, right, they just had, worldwide outage because of the CrowdStrike, that there were a lot of data centers down, right? That, a lot of people could have switched to AWS. I don't know what the liabilities are, but, or how much revenue they're generating from AI, because they are heavily investing into infrastructure, but maybe Copilot, in some of their tools is not as successful as they anticipated. So it could quickly gravitate toward 375, right? So here I would select a short put strike, at least 10% out of the money, right? Anticipating $50 move in Microsoft. Oh, the date out further. Calendar spreads are extremely popular. So yes, you can see that in the Microsoft, right? People are doing calendar spreads, right? Maybe they are long August 9 call, but at the same time they're short. So you can see here, because you have negative VANA and positive VANA, right? You can see that people are doing calendar spreads. So definitely, whether you do it weekly options expire, August 2nd and August 9. Somebody might go into the monthly expiration, August 16, right? But the further out you go, and the longer you would have to wait for that calendar spread to come into your direction, right? Because you're hoping that if you sell a forced memory call that expires on August 2nd, and then you buying same 470 call that expires on August 9 or August 16, you're hoping that it's not gonna break 470 level, right, by next Friday, but then gravitate toward 470 further out, right? So calendar spreads are definitely very popular strategy. Sometimes I also use it, right, if I'm not sure what the Microsoft is going to do, but I have, let's say, bullish or bearish bias, or even both, right? I think, it's either going to continue slowly going to the downside or continue going slowly to the upside. Then yes, calendar spreads would be one a strategy. Chuck, if tech is bottoming, what strikes would you sell cash secure puts on Google and NVIDIA? So if you do, option wheel, right, like Chuck does, sell puts, get a sign, maybe sell calls. The best strategy would be, again, looking at the positioning, right? Let's say right now volatility spiked to 20. This is where you sell those puts, especially if you want to own the stock, right? You probably don't want to sell short puts if you don't want to own stock, but if you do want to own a stock like Google at much higher premium, then I would go into maybe September. So August is too early, is already here, not that far away, but September expiration. Sorry, let's do Google. They still haven't adjusted. Google, we're going back to, let's look at estimated move. So the best thing is, let's look at an estimated move for Google for the months of September. 920, expected move 10%. So 10% of 167 is $16, so 150. So you have positioning at 150. So I would select 150 put, right? It's implied 10% move, 150 put. Let's go back to our friends at TradeDeer and see how much credit we can get for 150 put that expires in September. And that's assuming you want to own Google at 10% discount, right? You already have 10% discount, now you're going to have 20% discount. So then you select September 20, 10% down, 150 level. So you can get basically 1% on your return on your investment if you sell 150 put, and 10% discount on stock. So that's how I would use the estimated move analysis. And Google could be, you know, if market continues sell off, right? This is a pretty bearish price pattern. It could get to 150 between now and September, because it already closed this gap. All right, so next move, it will try to close the gap from the previous earnings, which is 150. Right, so if you want to own the stock at the long term, right, at the 20% discount, that would be the strategy. If you say, Vlad, what's 1%, right? You do this 12 times a year, you only get 12%, I want more. Well, then you have to sell 155 put, right? Then you get 2%, but then, you know, instead of 10% discount, you're only going to get 5% discount. So, you know, that would be offset between probability of success and return on capital. And same thing you would go with NVIDIA, right? You would type NVIDIA into estimated move analysis on bar chart. You have, for September, anticipation is 24% move, right? So with the earning, because the earnings are coming end of August. So you would do 20 per 5 additional, it's already down 25%. So, you know, another 25% down would be so it's already down 25%. Another 25% would be 50% down. That's somewhere around 200-day moving average. So right, strike 80. So same thing, I would go to NVIDIA. Go into September. You get 1.5%, right? You say 1.5 is not good enough, I want 2%, well, then you sell 85 put. Right? You sell 85 put, and you think this, you know, we're not going to break this support level, right? Because there's a lot of support at 85, 90 level, 2 standard deviation, right? Something negative, you know, you have to have bad earnings and bad macroeconomic data for NVIDIA to drop another, you know, 25% and give up half of its gains. Not in an impossible situation, but maybe not a core scenario. Chuck, Luis, thank you. All right, guys, you've been wonderful. Thank you for participation. We have a lot of people, probably a record number of attendance. I'm really thankful. Please don't forget to add info@yellowtunnel.com so you get our emails on Wednesday and you get our emails on Sunday in terms of the blog. And then throughout the week, I send invitations to this webinar. Sometimes on Sunday, sometimes I've done it on Thursday, Wednesday. So try to rotate, but it seems like Sunday is the best day in terms of participation. Thank you very much. Have a great day. You guys are awesome. And I will see some of you tomorrow in the live trading room. Hopefully I'll see all of you in live trading room tomorrow. Don't forget, we do have a live, any of these services, if you sign up, you have access to our live trading room. An earnings power trader actually opening and closing bell. But for these services, you have access to live trading room, and in the dashboard, you can see other benefits, right? Webinars, we have one-on-one support with our product specialists that I encourage you to participate, and blogs and webinars. All right, thank you very much and have a great day.